I'm speaking with Peter Dickson of Glennmont Partners. Peter, so tell me, how would you characterise the current investment landscape?
Actually, we're seeing more sources of finance coming into the market all the time. Institutional investors, pension funds, insurance companies are looking to this market. What they're seeing is steady, stable, underwritten yield in the long term and ever increasingly secure assets. Technology is maturing, prices are coming down, regulation is underpinning the cash yield through the life of the investment, and as a consequence there is more interest from institutional investors who are actually bringing a lot of new capital into the market.
But it can't be a wholly positive story. Are there any negatives?
I think actually we probably could do with more opportunities, more projects. I think regulation at the minute to some extent brings ambiguities. I think that the electricity market reform is possibly in the right trajectory at the minute, but we don't have the clear answers at present. As a consequence, there's a lot of sources of capital, but I would say there's a shortage of investment opportunities, if anything.
Okay, and so what would you say you generally look for in a project when you're looking to invest?
Well, we are offering our investors clear and predictable cash yield. So we invest only at the stage when we know exactly when the project will be operational. We're looking for very secure wind yield analyses. We're looking for well-developed EPC, well-developed grid connections. We're comfortable in taking the construction risk ourselves, but we just want to make sure that all the moving parts have been pinned down and the projects are secure, and we know exactly when it's going to be yielding capital throughout the life of the investment.
And do you see a turnaround, an increase in investment in the short term?
I think in the short term, yes, we are seeing as I say, increased capital coming into the market, and we're seeing now new opportunities, new projects being brought to the market. I think there's a consequence of the EMR uncertainty in a couple of years' time means that projects are being rushed through to some extent. So there's quite a lot of opportunities right now. There's a lot of new capital. I think for the next 18 months, this isn't a bad time.
Excellent. Thank you very much, Peter.